You want to send your kids to school, you need some healthcare cover, you want to go for holidays or buy more assets, right? So why selling your assets if you don't have to, if you can actually use the tools that are out there in the market to leverage these assets, stick to them, and then just, kind of extract the monetary value out of these assets, just like you do with mortgages, just like you do with your houses when, you need some more money. So we really wanted to make it as seamless and easy to use as possible. Now we are at a stage when they're coming proactively to us and they're asking, okay, so how could we participate in the market?
Welcome to Medium of Exchange, the podcast where we spotlight business owners building on a Bitcoin standard. Today's guest is someone who's tackling one of the biggest problems in Bitcoin. Igor Neumann is the founder of Firefish, a lending platform making it possible to borrow and lend directly on Bitcoin. No banks, no middlemen, no permission needed. With Firefish, he's building something radically different: the ability to leverage pristine collateral in a way that's open, transparent, designed to serve anyone, everywhere. Igor, welcome to Medium of Exchange.
Hi, Jason. Thanks for having me.
I'm so pumped to have this conversation with you. So, lending. Why lending? How did you get into this?
I mean, I think, as you mentioned, it's one of the toughest nuts to crack when it comes to Bitcoin, right? And as an idea, it's nothing super new, right? So what we're trying to bring to Bitcoin is basically helping Bitcoiners in the first place to never having to sell their Bitcoin, because we know that this is a great asset and we want to hold on it until forever, many of us. And secondly, as always, a real life situation actually led us with my co-founder Martin into building something around Bitcoin-backed lending, which was there was a life situation, an investment opportunity basically that Martin had, my co-founder, and he needed some funding for his project, right? And one of the options that he had was obviously to sell his stack and then fund the project, but obviously he didn't want to lose the control of his Bitcoins and to basically sell them and pay taxes and whatsoever. So that's why we've been looking for the alternatives. What is the second best option basically for getting funding when you're a Bitcoin holder, right? And at that time, I'm sure you remember, these were the times a couple of years ago with Celsius and BlockFi and all the other platforms that went belly up. We realized, both of us with Martin were coming from traditional finance, so the first thing you always do is you check the risks, right? So we understood that relying on what we call the trust bro model, where you kind of send your Bitcoin to a custodian or to centralized lender basically, and then you just hope that they will return your loan or Bitcoin after you repay your loan. This model basically broke down as we've seen in the past. So we've been looking for alternatives, and at that time there haven't been too many, right? One was obviously DeFi, where you could wrap your Bitcoin, send it to some other network, trust some foundation and all the bells and whistles around the DeFi protocols, which I think personally that not too many people really understand all the risks linked to this. So we were trying to find out if there's any other better way, and as it happens in life, if you don't have an alternative, you build it yourself, right? So that's why we decided to build a non-custodial Bitcoin-backed lending marketplace, where really we are helping Bitcoiners to not sell their Bitcoin, to never sell their Bitcoin, to use it as a collateral and get funding against it, right? So that was the background of the story.
That's awesome. I love that you guys are building, in particular, a non-custodial. I want to get into that a little bit later on. So first, I want to learn a little bit more about your platform, but before we get too deep into that, I just want to zoom out for a second and talk about why borrow, and then we can get into how borrow, right? Are you familiar with Dave Ramsey?
Not necessarily, no.
Okay. Well, here in the States, he's kind of this personal finance influencer, let's say. He's written a bunch of books, right? And he's in the same hometown that I grew up in. I've met him before a few times, and he's really good at helping people get out of debt. And so I just want to clarify for a second what we're talking about when we talk about debt, right? And the narrative is debt is bad. All debt is bad. It's really, really bad, except maybe for your house. But other than that, debt is bad, right? And it got me thinking about how when I was a kid, every year we had this TV show on this channel called the Discovery Channel, and they had this thing called Shark Week. And part of it was about how sensationalized sharks are. The narrative is that they're super dangerous and you should probably kill one if you see one because it's probably going to try and kill you, right? But in reality, they're a really important part of the ecosystem. And similar to how sharks have sort of a branding problem, lending maybe has a branding problem, but really in reality, it's a tool that can be used really for good or for bad. So can you just share a little bit about the power of lending? You know, you talked about never sell your Bitcoin. The rich have used this buy, borrow, die strategy. I'd love to hear your perspective on that. Yeah, I'll just stop there.
Yeah, listen, I mean, borrowing or credit in general is a two-edged sword, right? I mean, you really need to be careful about, how you manage your whole finances in general, and credit is a very important part of it, obviously. To your point, actually, I don't know if you know, but really here in Central Europe, credit also has been it has this connotation of being very negative. It's like something that only the poorest people use, and they always get into the debt spiral, and then they get bankrupt, and, they lose their houses and stuff like that, right? So really the sort of perception of credit in this part of the world is also rather negative. Also credit cards, credit cards have been historically used only either by the richest or then really by people who are living from, your day-to-day, from salary to salary. So I fully understand this. Credit is actually something that fuels the markets, right? Fuels the financial markets in the first place in traditional finance. And secondly, I think if we actually zoom out from the concept of credit to what is the underlying assets under the credit that you're taking, actually, I think that's the very important point, right? Because what we are really trying to get to, as you mentioned, like there's this exception of, maybe you can take credit against your house. But then there are other instruments, other assets, and you mentioned also the wealthy people have been using this strategy forever. Good assets, you never sell them, right? You want to stick to them. You want basically your family or your kids to inherit them and so forth. So you want to stick to the great assets. At the same time, you might have some funding needs, right? You want to send your kids to school. You need some healthcare cover. You want to go for holidays or buy more assets, right? So why selling your assets if you don't have to? If you can actually use the tools that are out there in the market to leverage these assets, stick to them, and then just kind of extract the monetary value out of these assets, just like you do with mortgages, just like you do with your houses when you need some more money.
Medium of Exchange is brought to you by Polaris Payments. Let's face it, for now, businesses still need to take fiat and credit cards. Polaris Payments helps with all of your credit card processing needs using a consultative approach. You can think of Polaris like a performance coach, helping take your business to the next level when it comes to taking all forms of money. For more information, check out polarispayments.com. Now let's get back to the show.
And you just pledge your house against your loan. So this is the same concept, but at the same time, as I mentioned, really, I think we always tell people, do not over leverage yourself. Make sure that you'll be able, worst case scenario, you have either enough of additional collateral in terms of Bitcoin, for example, or you're really able to manage your finances in the proper way. Because really, as I said, it is a two-edged sword. And, people should be really careful about using it because it might cause troubles, in other words.
Yeah. I like how you mentioned this sort of the polarization. You're right. It seems like we have, the implication is that, to tie back in the shark narrative, it's like we have loan sharks, right?
Yeah.
And the implication is that they're extractive, they're greedy, there's no concern or care for the borrower, they're sort of the villain in the story. And then you've got the rich who, when you talk about billionaires, I think sometimes people think they literally have billions of dollars in their bank account, but they're not living on it's equity in their businesses, right? And then they take loans out against their equity. And as Bitcoiners, we're able to be smart and, use wisdom, but we're able to do the same. That's assuming the tools are there. We need tools like Firefish. And it's really exciting to see what you're building because you saw all the people get wrecked, from all the BlockFi and Celsius and stuff. I was able to pull out my money like just in the nick of time, and it was fine. But so tell me. So let's go on the rich side of things for a second. Tell me a little bit about buy, borrow, and die. How do Bitcoiners leverage that? Tell us what that strategy is. How do Bitcoiners leverage that strategy, and how do they do it in a smart way so that they don't get wrecked?
Yeah, so I think what I really like about Bitcoin is that it allows the regular folk, regular Bitcoiners to actually apply the strategy that has been available only either to the richest people or people with houses, people with mortgage. And especially the younger generation nowadays, people struggle with real estate. It's basically impossible if you're a uni grad to be able to afford a house unless you want to really kind of stay in debt for the rest of your life. So with Bitcoin, which is really accessible to everybody, I think this is the beauty of it, that anyone who holds at least a portion of Bitcoin can start living this way, right? Can start actually leveraging Bitcoin as the ultimate collateral, as the ultimate asset, and start living off it, right? So one of our actually statement is that never sell your Bitcoin, live off it, right? So that's exactly what we're trying to bring to the market, to regular Bitcoiners, as well as obviously institutions. To your point, this is really very important. Like, as we've discussed, there have been institutions that basically went belly up. People lost their Bitcoins and all that. So really the first thing, and also like in traditional finance, when a bank goes bankrupt, there's always someone, to a government, let's say, or a government institution that can help you to retrieve your funds and all that. Certain transactions can get reversed and all that, whereas this is not the case in Bitcoin, right? So once you send your Bitcoin somewhere else, then you're done, right? You need to trust the counterparty to be able to fulfill their obligations and return the Bitcoin back to you. So that's why I think it's really crucial for everybody, before they jumped on this sort of strategy, or I would even say lifestyle, right? Like leveraging your assets the way the rich people do, to really do your due diligence, as we say in Bitcoin. Don't trust, verify, and really try to understand what it is that the platform or the institution is offering, right? And there are really a lot of nuances. First thing, what I would mention is really the difference between custodial and non-custodial sort of approaches. I'm not even talking about DeFi, where really you need to kind of trust some code that sends your Bitcoin somewhere, reps it somewhere, and does who knows what with it. With all respect, obviously, to the DeFi community. But with centralized lenders, again, as I mentioned, if they go belly up, there's no central institution in Bitcoin that would help you to get your Bitcoin back. So that's why we felt that the non-custodial way of storing a Bitcoin, which is literally, when I say non-custodial, meaning that you are actually not sending your Bitcoin to us. You are actually just leveraging native Bitcoin technology like multi-sigs, partial signed transactions, and some other features of or native features of the network that safely lock your Bitcoin, and you get it back only in case you repay your loan. In case you do not repay loan, so if you default, obviously Bitcoin goes to the liquidation, and the investor or the lender basically that provided the loan for you will get their investment covered, right? So this is the first thing that I would definitely check as a potential borrower. And secondly, then there are other important components like, for example, the loan to value ratio, right? Which means if you're taking a loan, for example, you want to borrow 100 grand, what is the amount of Bitcoin that you need to cover this loan, right? So in our case, for example, or I would even say the market standard is around 50%. That means if you want to borrow 100K, you need to deposit 200K worth of Bitcoin. There are obviously platforms or institutions that have these LTVs lower. That means you need to kind of pledge much more of your Bitcoin. Makes it safer for you. But on the other side, and we've seen a lot of cases, even some of our users came to us with their own experience that they were kind of greedy. They went to a different vendor that offered like 80% LTV. So really the cushion for potential liquidation was only like 20% roughly. And then they got liquidated because Bitcoin, as we know, it is still pretty volatile, even though I think it's much the volatility is much more calmer or sort of matured than it used to be in the past. But volatility really can kill you, right? So don't be greedy. If you're a borrower, try to be conservative. Go for LTVs that are safer, or that where you do not risk a quick liquidation, right? Because normally in lending or borrowing, there is always the counterparty that is providing the funds for you, right? So they need to be protected as well. So that's why you are always pledging more Bitcoin than the actual loan. But at the same time, if this ratio is very high, meaning that you deposit only slightly more than the loan itself, and if the Bitcoin price goes against you, really you're at very high risk of liquidation. So that's another very, very important point that I would mention for anyone who's willing to try this strategy or get into Bitcoin back borrowing, basically.
Yeah, it's nice the volatility is lowering. I don't think it's necessarily an 80 vol asset anymore, but it's obviously, there is some volatility. And so I think 50% probably makes a lot of sense. 80, I think is maybe not, market is not quite mature enough for that quite yet, as some people have seen, as you mentioned. Yeah, no, I mean, I think what an incredible tool to be able to be long the appreciating asset and short fiat. It is a sharp tool. You have to be careful with this tool. But the ability to live your life and, we have expenses. We, sell your chairs. Like some people still need chairs. I do. Okay. So let's go into your platform here. The platforms that I'm the most familiar with are Strike, who just launched their lending platform. I've been a Strike user for a while. I started playing around. I started looking into their lending. I haven't actually taken a loan out on their platform, but it's a 50% LTV. I felt a little bit hoodwinked on the interest rates because he's like single digits, and then guess how much you have to borrow in order to get single digits? It's $5 million loan, which means you have to pledge $10 million worth of Bitcoin.
Okay.
And Strike is it's a custodial, that's a pretty significant amount of Bitcoin to hand over, hoping with this Trust Me Bro model that, you're going to get it back. Another tool that I'm more familiar with is Unchained, where it's this more collaborative custodial platform. They're not rehypothecating. That it's super safe, but the interest rates are not super low, and at the moment they only have it available for businesses. One of the really cool things I think about Bitcoin is that it is financial empowerment for the little guy. Not everyone has a business. Not everyone has large minimum capacity. And you guys have, what is it, like $800 or so minimum?
Yeah, exactly. 800 is minimum.
And what's kind of your average loan size that you're seeing?
It's around 10K, I would say. I mean, it's important to mention that we've started with sort of focus on the retail market, right? So really the sort of your blood Bitcoiners, we wanted to really bring this tool, as you mentioned, like some of the other providers or platforms, you really need to be super rich to be able to get to, nice interest rate, or even for them to be able to speak to you. So really we started the bottom up the bottom up approach. Yeah.
I mean, there's millions of Bitcoiners, and they all know to not sell your Bitcoin, and they all still have expenses. So this is globally. You can get a loan through Firefish. Is this correct?
Yeah, absolutely. I mean, unless you're from a sanctioned country, the platform is open to basically anyone.
And so so it's like what, 50% LTV, a loan to value ratio. In other words, if you want a $10,000 loan, you need to pledge $20,000 worth of Bitcoin.
Correct. Yeah.
And then what are you guys doing in terms of terms? Is this like a 1-year term or?
Yeah, so in terms of terms, we have like standardized terms from 3 months all the way to 2 years. I mean, there's been really a lot of demand recently from the community. And, a lot of Bitcoiners would tell you who do follow the sort of Bitcoin 4-year cycle that they want to get the 4-year loans. But obviously you need to consider also the other side of the equation, right? So I think what's important to mention that we are just a marketplace, right? So we're actually connecting the borrowers with the lenders. We are actually not, and that's maybe the difference to Strike, where Strike they're a balance sheet lender basically, right? So they have an entity behind them who's providing the loans, and they are dictating the terms and the interest rates. Whereas on our platform, it's an open market where, the borrowers come, they say, hey, I want to borrow at, 8%. and they see all the requests by the other borrowers. If the lenders find their requests interesting, they can, kind of just click and deal, basically. So we're literally just a platform that is matching these two sides, and we've seen the interest rates actually going down in the last couple of months, which is great, because that obviously proves that the open market model really is the best for price discovery and really getting the best rate that you can at any point in time. And at the same time, once people start playing with the platform, they're starting with $800 whatever, and then they see, I got my Bitcoin back. The investors the same, or the lenders the same. Basically, they send the money to someone, they get their money back, and they see that it works. So the volumes and the adoption and the overall liquidity is actually growing. So that's why the interest rates are going a little lower as well. So we really feel with larger adoption. And also what's important to mention is that the way we build the platform is to make it really super easy for both parties. Right? So if you're a lender, for example, you've got some free fiat or stable coins, you want to invest them, you don't want to keep them in a bank at 1%, 2%, 3%, especially here in Europe. You can invest into Bitcoin backed loans, but you do not have to be Bitcoin native, right? So your only role is basically send the money to the counterparty and then receive the money back. And also from the borrower's perspective, one of the tricky sides of Bitcoin in terms of the overall adoption, I would say, is really the concept of self-custody, right? I don't think everybody's ready for being a self-custodian or custodian for their own Bitcoin. It has many pros, but at the same time, once you lose your seed, you lose the access. If you keep your Bitcoin with a custodian, or just like when you keep the money in the bank, you don't have to worry every day, is my seed safe? Is there going to be a fire in the building or whatever? So with this in mind, we also created a slightly different workflow for the borrowers, where you do not have to actually store any seeds, keep your keys or things like that, right? So we're using a specific technology where you, as a Bitcoiner, once you lock your Bitcoin, you do not have to get any, or you do not have to basically fiddle with any cryptographic material. You do not have to sign transactions and stuff like that, right? So we really wanted to make it as seamless and easy to use as possible. So this is also an important differentiator, I would say.
Yeah, how does it work? Like, do I, let's say I want to get a loan, do I send you my Bitcoin, or is it somehow like you lock up my Bitcoin, then I can't access it? Like, how does that work?
Yeah, so in very simple terms, basically, as a borrower on the platform, so once you're matched with a counterparty, with a lender, you get to a process of locking your Bitcoin. So what the platform does, basically, in your browser, you generate an escrow address directly on blockchain. So it's an address that is generated by you, to which you send your Bitcoin later on. But what you also do, you pre-sign particular transactions. So that's what I mentioned at the beginning, that we're leveraging the partially signed Bitcoin transactions sort of technology, Bitcoin native technology, which means that you no, it's actually PSBTs. It's a simple basically thing where you have 4 particular transactions that you sign at the beginning, and that means that you're actually limiting what can happen to your Bitcoin, right? So your Bitcoin, once it's locked in the escrow, can either move back to you, right, once you repay your loan, or it goes to the liquidator if you, for example, default. So there are 4 transactions, 4, not 3. One is the repayment, so you actually pre-sign the repayment transaction, and when we get the notification that yes, you've repaid your loan, Bitcoin moves back to you. The other transaction that you pre-sign is a default. That means, again, as I mentioned, you don't repay, and then Bitcoin goes to liquidation. Third transaction is so-called liquidation, which means the price liquidation. So if Bitcoin falls to LTV 95%, then you get liquidated. If you do not top up collateral, obviously at any point in time, you can go to the platform and add more collateral if you see that Bitcoin is moving against you, or even at the very beginning, as we discussed, the default LTV is 50%, but we've seen that many people are actually locking more Bitcoin because really they do not want to lose. Basically, our default rate is 0.0001. We had 2 or 3 cases literally in the history where people weren't able to repay their loans, right? So that's the price liquidation. And then the 4th transaction is something what we call a zombie apocalypse transaction. In case that Firefish would disappear, our platform or the infrastructure would go belly up. The last thing we wanted to happen is to get your Bitcoin locked in that escrow forever. So after particular time, after certain conditions are met, and we are using time locks, in that particular case, you can actually, as a borrower, you can retrieve your Bitcoin back if we really disappeared, if there's this zombie apocalypse. So apart from these 4 particular scenarios, and apart from your own address or the liquidator's address, there's nothing else that can happen to you, or to your Bitcoin in particular. So we can't send it to ourselves. We can't send it to police. If the police comes and say like, hey, this guy, he took a loan through your platform, send us his Bitcoin. So we can't do that, right? So there are only 2 addresses that are hard coded, and we can only, or actually Bitcoin can only move to either or of these addresses.
What's cool is you guys have leverage technology to have an escrow service without having to have actual escrow company.
Exactly.
That's the beauty of Bitcoin.
Yeah. I mean, a lot of people were arguing at the very beginning, like, hey, well, there's nothing going on Bitcoin. I mean, the layers 2 are the future, and things like that. So we're like, okay, let's think hard. So it took us a couple of months, obviously, to come up with this what we call Firefish protocol. So which is the set of rules and what happens, the multi-sig setup and all that. But I think we've proven that even with the existing technology that we have on Bitcoin, you really can create something that is much more safer than standard trust me bro models, I would say. Obviously, there's no rehypothecation, which is very important, because that's also where a lot of people lost their Bitcoins. Yeah, even though people, as I mentioned, people argue that Bitcoin is not as flexible as DeFi or Ethereum in general, the whole ecosystem, I think, and we've proven it, that even on Bitcoin and the technology that exists right now, you can build something that is much more secure, it's resilient, and future-proof.
Yeah, I mean, it's kind of like an 80% LTV versus a 50%. It's like, do you want something that's like secure, where you're not going to get wrecked, or... Yeah.
Exactly.
Where do you see... I come from the real estate world. I've done a ton of escrow not a ton, but I've done several escrow deals where it's just like loads of paperwork, and it doesn't matter. My point though is like, in my mind, I'm so used to a 30-year framework. Now, 30 years, obviously, it's like, in this case, the United States government is like subsidizing these loans for like housing loans. And so maybe that's unrealistic to start doing 30 years anytime soon. But where do you see the terms in, let's say, the next 5 years or so? Because you said that the terms tend to be extending and interest rates have kind of been lowering as the market's maturing. Over the next like 5 to 10 years, where do you see this going?
Listen, I think, especially since last year, I think that was a tipping point for Bitcoin, really. I mean, love it or hate it, I think the ETFs in general had really kind of helped with the adoption of Bitcoin. And they sort of helped to move Bitcoin from something that people used to perceive as a terrorist financing tool almost, to a legitimate commodity almost. So I think the times where Bitcoin lending in particular and borrowing was driven by only a handful of institutions who were charging you very high interest rates are over. So we see the adoption of Bitcoin in general, and with the entrance of new entities, especially the traditional finance institutions, asset managers, banks. Almost every week there are news that a bank is entering the Bitcoin. We feel that the capital that has been locked outside of the Bitcoin ecosystem is now getting into the Bitcoin ecosystem, and that's going to help with lowering of the interest rates and also extending the terms, right? So at this point in time, I think many of the platforms would offer you really, maybe from overnight or 3 days to like half a year terms. We really are seeing a lot of demand for the longer term, and I think it's just really a matter of time once more and more liquidity from the traditional finance is pumped into this market. The rates will go down, as well as the terms are going to be much more attractive for the regular folk.
It's a two-sided marketplace that you have, right? And so you really need to have supply on both sides. You need to have borrowers who are looking to borrow and lenders who are looking to lend. Obviously we talked about borrowers who are looking for longer term and lower interest rates. That's pretty obvious. But are you experiencing challenges with, like, what's your greatest challenge with having that two-sided marketplace? Are you really struggling trying to find lenders, or kind of where are you at there?
Well, definitely at the very beginning, it was a hard sell, right, to the lenders. So I would say like 95% of the lenders at the beginning, 2 years ago, or a year and a half ago when we launched the platform were Bitcoiners themselves, right? Because they did understand the proposition. We obviously were talking to a lot of TradFi institutions, and when we came to them and say like, hey, why don't you start funding Bitcoin backed loans? They're like, oh yeah, no, Bitcoin, that's we can't do it, and so forth. As I mentioned, with the ETFs, with all the regulation as well, hate it or love it. These institutions are becoming much more receptive to Bitcoin. First, Bitcoin. At this point in time, I would even say that half of the marketplace or of the lenders are non-Bitcoin native, right? With sort of Bitcoin becoming really something much more standardized, people are sort of getting interested in, okay, so that the interest rates are still rather high compared to other market instruments. At the same time, the risk reward profile and the security sort of setup is super attractive, right? So a lot of people come to us, they're like, how on earth can I get, how come that I can get 10% on euros or dollars where the banks are offering only like 2 to 5% if these loans are actually over collateralized? I do understand there's much more Bitcoin than the loan that I'm providing, right? So how come this is the case? And it's really just the case of the market maturity and the liquidity. So let's say 2 years ago when we started the project, a lot of banks or TradFi institutions again were looking down at us. They're like, well, no way. Now we are at a stage when they're coming proactively to us and they're asking, like, okay, so how could we participate in the market, right? So we see that the demand is definitely there. There's, as you mentioned, millions of Bitcoiners. There are a lot of institutions. Every week, again, you have news about a new Bitcoin treasury company coming to the market. And this is also one of their strategies. Like they use their Bitcoin as a collateral to get a loan to buy more Bitcoin, right? So they're kind of leveraging themselves. So that's one thing. And the other thing is obviously miners. Miners is the biggest holders of Bitcoin. I can feel for them. Like every time they have to sell their stack, it is really painful. So what is the other option they have, right? So basically borrowing against their stack is I think a natural strategy that they want to employ. So in terms of the demand side, yes, the supply side has been a little of a challenge, but really, as I mentioned, we see a lot of improvement actually in this space. So it's not only Bitcoiners anymore. It's I would even say people who are into investing. I mean, in the US, definitely the almost every other person owns a stock portfolio. Here in Europe, it's not the case that much, but more and more people, and especially people who understand investing, they're finding this particular market or instrument very attractive because they see the yields are there, they see that it's very, very secure, and we see a lot of demand coming from this sort of TradFi space, I would say.
You and I understand that you should be long Bitcoin and short fiat, and your assets should be in Bitcoin and your loans should be denominated in fiat. One of the cool things about your platform, Michael Saylor talks about how Bitcoin is like Manhattan 100 years ago. And you don't need $1 billion to buy real estate in Manhattan. You just need a few dollars. So you can buy the equivalent of Manhattan 100 years ago today through Bitcoin. But what would you say to like the regular everyday person who is buying Manhattan, aka Bitcoin? They're interested in holding that appreciating asset and borrowing using a platform like Firefish, but want to do it in a smart and wise way. One of my concerns, we're not necessarily advertising, but we are sharing to the world information about your platform. And I think your platform is really important. But one of my concerns is all the people, I've got friends who bought Bitcoin at the top, sold at the bottom, and have never looked back, have never bought Bitcoin since. They are emotionally scarred. And as we talked about, this is a really cool, powerful tool, but you can also, you need to be really careful. So is there a framework or sort of a heuristic for someone to be smart about a platform like Firefish?
I think the key point here is what people expect from Bitcoin, right? So I would say that 99% of people who come into Bitcoin, they come in for the money, right? For the wins, for the price appreciation. They buy it at the top, sell it at the bottom, and they want to forget about it. Like, yeah, crypto, don't even mention that anymore. I think what we as the community have to do a little more is that really to differentiate the positioning of Bitcoin as a speculative asset. And I started my Bitcoin journey trading it, right? So who didn't? Basically, we need to help people to shift their minds from this is not something that you're gonna get rich overnight. It is an asset. It's something like as if you bought a piece of Picasso painting, right? Or something that really doesn't appreciate. I mean, the bad thing about Bitcoin actually is that it does appreciate a lot, year over year. So people really see the quick buck there. But and I've experienced on myself as well. Like once I stopped thinking about Bitcoin as a tool for getting wealthier, rather a tool apart from all the other elements of Bitcoin or the use cases of Bitcoin, just like payments and all the freedom and liberty things behind it, which I really love. But when I started looking at Bitcoin as an asset, something that is purely mine, that no one can take from me, basically something that really sort of ensures that in the future, worst case scenario, I'll be fine because there's going to be Bitcoin will help me with my future needs, then you're sort of relieved of the pressure of looking at the charts every single day and trying to calculate how much money you made or lost and all that, right? So stop thinking about Bitcoin as a trading asset. Look at Bitcoin as a long-term asset that really appreciates in time, that brings you many other benefits. I mean, obviously, if you get a piece of Picasso painting, it would be difficult for you to sell it and all that. But with Bitcoin and its sort of fundamental, it brings much more than just any other commodity or an asset that you just trade and want to get rich on, right? So stop thinking about Bitcoin as a speculation. Think about it as a long-term asset, and that's when people get it and start understanding that even taking a loan against Bitcoin is not something that you do just to kind of leverage yourself even more and get richer quicker or whatever, but it is something that actually helps you with your long-term goals, helps you to kind of live your life even in a much better and sort of sensible ways. So that would be my take, right? But we've seen it everywhere, like people getting burned on in the crypto markets in general and Bitcoin as well. So I think this would be the key differentiator.
So maybe the first question is, what is Bitcoin? I also like to flip it. I like to invert it and think of this not as a speculative asset, but as money. And I'm doing the most conservative thing you could do, which is just saving money. It's just a very normal thing. And it's only because fiat is broken that we have the financialization of everything. And the whole reason why I started buying rental properties to try and store my wealth and preserve my purchasing power and all of that. And so, I mean, Bitcoin as a tool for financial empowerment that you control, that no third party, central bank, institution, anyone can steal from you. All the very amazing quality, all the incredible qualities of Bitcoin, many qualities of Bitcoin that make it so special. Before we wrap up, I want to shift the conversation to a very different topic, if that's okay, which is I was doing a little bit of research on you, and you mentioned the payments and the medium of exchange era is maybe starting to happen over in the Czech Republic. So can you share a little bit about that? What's, here in the States, it's pretty hard to buy goods and services using Bitcoin. And I know a lot of Bitcoiners that would like to do that. Can you share a little bit about that?
Yeah, I mean, I think so. We're based in Prague, in Czech Republic, in Central Europe, and I think many people call Prague the capital of Bitcoin, at least in Europe, right? Because there's a lot of history of the local people trying to sort of get to their or fighting for freedom since the medieval ages all the way through the communist times and all that. Really, people I think appreciate the freedom and liberty or perceive it in a different manner than maybe sort of people in the Western world, where we've been under communist oppression for decades. We experienced terrible wars and all that. So I think we have it almost in our DNA that having freedom, and not only freedom of speech or freedom of movement and things like that, but also freedom from the state in general is something that is very, very deeply engraved. So that's why I would say is one of the reasons why the adoption of Bitcoin here in Czech Republic is really strong. As I mentioned, we also see it on our platform where both on the borrowing and lending side, we see entities or companies like small private companies. So people who actually are the mini Bitcoin treasury companies, they do hold some Bitcoin on their balance sheets. And here in Prague in particular, or in Czech Republic in general, the adoption is really pretty strong. I mean, first and foremost, we have a very strong community. There's a kind of a decentralized but semi-organized community called 21. Which is like, micro communities in different cities. There's a lot of meetups, there are a lot of podcasts and all that. So really, there's a lot of content being created in this space. And secondly, also in terms of the adoption, I mean, there's one company here in Czech Republic that provides like a QR code for restaurants. So if you go to a restaurant, you don't have to wait for the waiter. You just scan the QR code, you see the menu, and you can also pay. And then actually they do allow for Bitcoin payments as well, right? So instead of waiting for the waiter and paying with the cash, you can just scan the QR code. So I have heard that it's around 70% of the restaurants in maybe Prague or Czech Republic in general have this technology, and you can actually pay with Bitcoin.
Wow.
So that's really crazy.
70%.
Yeah, and second thing is there is some sort of like a local Amazon. There's a company called Alza, which is really like a top provider, basically like a Czech Amazon, I would call them, where you can really buy online anything from furniture through cameras and whatsoever. And they do accept Bitcoin as well, right? So anyone and they're really, really big. I mean, anything you want to buy is like going to Amazon and paying with Bitcoin. Can you imagine that, right? So here in Czech Republic, people have the option. And these are just two examples of the adoption, right? So I think be it due to the historical reasons, be it due to the fact that people here are really, the community is very strong. There's also one of the local podcasters. He's got like 100,000 followers on his podcast on YouTube. Considering that the Czech Republic has only 10 million people, I think it must be per capita the most successful Bitcoin-only channel, right? So I think that explains a lot.
That's incredible. Do you know the platform, the name of the company where they provide QR code for restaurants and Bitcoin payments?
Yeah, it's called Querco. It's Qwerko. It's like QR, but it's Qwerko. Yeah, you can look it up.
Okay, cool. I'll have to look it up. Well, Igor, if folks want to learn more about Firefish and what you're up to and the incredible platform you're building, where should they go?
Definitely reach out on either directly through our website, which is firefish.io, or we're pretty active on X, so it's firefish_io. You can find us there. One thing I would mention also on our website, we've published a book actually, Bitcoin, the Ultimate Collateral. You can download the book as a free PDF. I mean, it really explains the concept of collateralization. There's a couple of authors behind it. One of our partners from Brains, which was the first mining pool in Bitcoin. So definitely, I would recommend that. But otherwise, reach out either through the website or ideally through the X.
I'm gonna have to get this book. Is it available on Kindle?
I'm not sure. I don't think it's yet available on Kindle. I think you could buy it on the Amazon, but you can actually download it as a free PDF on our website. So go to the Firefish.io. There's the menu book, and you can download it there.
Perfect. Okay, well, I'm gonna have to get that book. Thank you, Igor.
Awesome.
All right, thanks so much.
Thanks a lot, man. Thanks for having me. Have a great one.